Just gonna hang out and chill until market open time, and then I will start talking about which trade I'm making and why. But I am gonna worry way less about you guys. Not necessarily thinking you guys should follow me too much. If I decide to change my mind mid trade, I'm gonna. Um, Yesterday I was trying to talk myself to go short right before it started going short, and I just refused to do it for probably several reasons. And so I'm gonna make sure that don't happen again. And yeah, after I get a couple days of success and proof and data, then maybe we can talk about how I can do this to where it's also maximize benefit for the viewer. But I think the real maximized benefit is just learn what I know and trade it yourself without even having to listen to me. Like, I mean, if you have my YouTube on and you do a trade and you see I'm in the same trade, that should be a strong confirmation. But like, you should know by what I teach you of what trade you want to make before I ever make a trade. And I'll show you soon. But until then, we just chilling. Got 13 minutes. Now's the time to show who's on the Lord's side. And want his foes to know that if before let's branch the brown. You trading while you're on a 9-hour road trip? That sounds crazy. I don't know how to trade on a road trip. But good luck. Today's the day I wake the world up. Gonna have a sweet trading day. Gonna make a wrap-up video at the end of the day. And I expect that review video is gonna be quite the video. 10 more minutes. Know this, that every soul is free to choose his life and what he'll be. For this eternal truth is given. God will force no man to have. He'll call, persuade, direct, around, and bless with wisdom, love, and light. In nameless ways be good and kind, but never force the human mind. Freedom and reason make us men. Take these away, what are we then? Mere animals, and just as well the beast may think God had no hand. We no more our powers abuse, but ways of truth and goodness choose. God is pleased when we improve. His grace and seek His perfect love. Alrighty. What do we got here? So yesterday was very strange. I don't know how I fucked myself up like that, but basically all the principles in which I use in trading yesterday said down, 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 down from the beginning all the way to the end. There was no point it didn't say down. And so clearly I just was not paying attention to what I'm supposed to, and it's time to fix that. And I'm going to teach you all the principles, and like I said, sometimes I may get into a position. So like one thing that happened yesterday for sure was I got into the position and I thought I was going to go long, and it did go long, like $5, $6, $7. And the chart started doing something where I started talking to myself, and they're like, it's probably going short, but like I already went long, already told people to go long. And so like I just went with it rather than changing my opinion based off the changing data. And so today I'm not going to worry about anything you guys are doing. You guys can do whatever you want to do. Try to copy me, whatever. But I am not going to be dropping messages about when to do what. We can save that for like a week from now. Right now I just need to get my money right and never lose again. So good luck. We got 5 minutes. I'm still going to be going over everything, why I think it's going to be doing what and all that good stuff, but you're going to have to figure out what trade you want to do all by yourself. The time is far spent, there is little remaining. Publish glad tidings by sea and by land. Hasten ye heralds, go forward proclaiming The kingdom of heaven is at hand. The kingdom of heaven's at hand. And there is a small possibility that when the market opens in 4 minutes that I'm not able to trade because Jerome Powell's talking today, and sometimes they turn off the margin benefits on these types of days. And so I definitely don't have enough money to trade a contract without the margin. And so we shall see what happens at open. I'm probably just going to get in a position and close it out real quick just to see what I got. Make sure I can trade. As long as I can trade, then I should be here all day. But if I can't trade, then I'll just have to come back tomorrow. Your pattern and friend, our little afflictions, though painful at present, with the righteous in glory will end, along with the righteous in glory will end. And possessing truth or hate, you are called to endure. Angels are waiting to crown you with blessings. Forward, be faithful, the promise is sure. Forward, be faithful, the promise is sure. Be fixed in your purpose, for Satan will try you. Weight of your calling he perfectly knows. Your path may be thorny, but Jesus is nigh you. His arm is sufficient, though demons oppose. Is sufficient, though demons oppose. Alright, we're about to get to the open. Now you remember we draw a horizontal line at the open price. We got one more minute. God moves in a mysterious way. Definitely looks like a fake out to the downside, but I'm not betting on it yet, because it can fake up and down both sides for a minute. Definitely feels like it's going up today. Nice. And I can trade. So let's see what happens. Alrighty. So what to see? Alright, so the options opened up at $36 today. It's pretty large. Alrighty, so now I'm gonna take a profit there and wait to get in long again. Oops. I did not do that. Okay. Sometimes it puts a position in for me when I never put one in. There we go. Interesting. It's breaking down. Where'd we open at? 5106. Down $10. Very, very quick. All in 3 candle bars. Definitely feels like a bottom's coming in. Just too fast. Can't keep running. They get a resistance, so it could definitely stop running here or keep going down, but for now we're gonna see if it comes back up. Alright, I'm just gonna chill for a second. Let it find out where it wants to go. Let's see here. Oops. Okay, we definitely want to put this guy right here. Red. Honestly, this guy should probably be right here. Man, I'm definitely gonna just play off this resistance right here. Assuming I don't miss it. Should I? That's a strong reversal. It's dumping back. Alright, let's see what happens. Alright, if I'm looking at this, the chart says that it is most likely. What is it going to do? Lower, high, low. I mean, the chart definitely says it wants to go down. Damn. It's a hard chart to put in, though. Alright, but I'm going to believe it. Assuming I get a good fill. Look, when you get a movement and then you get a chop, it almost always moves the same direction. Like, you can have a movement and then a strong reversal, but if that reversal fails and then it just chops around this guy, like, you're almost guaranteed this downward movement. Or if it went up and then it chopped, then you would be expecting upward movement. Man, it's a little spooky, but it feels like it's just gonna go down. So we drop there and then there. This would all still be considered chop. I mean, our line is 50.96 and we're only $2 away from that. So even though it looks like it's moving more, looks like chop to me. It's probably coming up to here. And then I'm going to short it, I think. Surprise, surprise. Alright, so the question is, how far can this run? I do not have a good answer for that right now. Definitely looks like it can fall more than that. I would say that's looking pretty good. I'll take $45. It's a start. Now, I'm kind of expecting just more chop right here, but the reversal, timing reversals are hard, so it's better to, rather than trying to catch a fucking knife like I did yesterday, it's much better to let the reversal begin to trend and then tell you what type of reversal it's gonna be. The market tells you what it's gonna be every time. You just gotta be patient and wait for it to speak to you. If we hit this line and bounce off, I'll probably try to get short there. But it looks like we're having a similar pattern to yesterday, just not nearly as much price action. Like if you look at when it drops down right here, we get a little pump up at the potential reversal, and then as it comes back down, we got lower high, lower high, lower high, lower high, and then it had one little fake out, and then it dumped. And so that was that pattern right there was extremely specific. Yesterday. So here we just did this green bar, and now this is a higher green bar, and it's hitting that resistance point that I wanted to get short at, which I probably should. But the problem is if I get short right there, like I probably just want to take my profit at 50. I mean, I'll get short one contract right here. Alright. And then I'm just going to close it out real quick. Assuming I didn't miss it, which I kind of did. Alright, well if it's going to keep bouncing off that resistance, then it's going to make me feel like that resistance is strong. Alright, I'll close out for that one. Hold on. Let's see what happens here. We do not mind a reversal one bit. Alright, let's get out of this. I want to see what my real market's doing. Looking like we is getting a reversal. The question is what type of reversal? Is it just going to boost right through? It's going to come to this guy. Probably have a cool off. But the fact that it did break through this resistance suggests that the upside's now pretty strong. Do I see it coming back down from there? It's possible, it's just not likely. I'm gonna wait and be a little patient. Not exactly sure what I want right now. Really looking like it want to go green. I mean, we're definitely broken trend here. Interessante. Yep. Alright. I think I'm going to go long here. If I can get it to come back down. Like if I'm going to go long or short, I'm always going to wait for it to do like a pullback. So that if I do get in, hopefully I'm getting in at a better spot rather than a worse spot. Like it's either a pullback or like if I'm going up and then uptrend if I'm betting down. But right now I am looking to bet up, I believe. I mean that's what is that? almost $10 bump. And that would be weird to do that and then that. It don't really line up. What is this? 59.4. I mean, that's almost $10 too. But definitely different way of hitting it. And this was down. Now we're starting to see higher lows. Definitely supports the upside thesis. Just want a better fill price. Does not look like I'm going to get it. But maybe. We're waiting for it to come back down here, and then I'm going to go long, I believe. I think that's right. It'd be like an upside down head and shoulders. This would be a head, this would be a shoulder, and this would be a shoulder if it come back down. So 50.93, 50.94, good time to go long. Assuming we get it, it may not give it to us. Did I miss it? Bummer. Bummer. I should have gotten that one. I should have got it over here. I wanted to catch the second one. It just happened too fast. Alright, now we're coming back up. I mean, man, this could really run right here. I think I'm gonna go long one. I'm gonna customize, close it at 51.97. Do 50.95. Definitely missed too much of that upside, but at this point, what we've seen is it came down, never broke the resistance, came down, this was still in the chop, and then it came down, and then once it started coming up, it's never broken down, and so for me, it's hard to imagine that it does break down. Like, I'm kind of just super bullish to the top side. but maybe I shouldn't be. I'm gonna go ahead and take this profit and just figure out what it do next. I want to find some type of support resistance that I can try to guesstimate. We are headed green to the open. We are back to the open almost. $2 away. And there it is. So we went down without any resistance really, then up without any resistance really. I mean, man, that does feel like down again. But is it possible that it just rips through and just goes way up? Maybe. Let's see what it wants to do. Went right to that open line. And now pushing back down. And so from the open 5107 to the low 5087. Is that really $30? No. That would be $20. Yeah, $20. Okay. So we've had a $20 movement, and we know that the credit is right now currently $34 for the SPX at the money 0 day to expire credit, which definitely tells us, all right, I'm gonna go short here. One. Oh, maybe not. Are you working? Bruh. I think TradeStation is frozen on me. Oof, and it's got me short 2 right now. That's aggressive. But it worked. It got me $15 out of that, so that was lucky. TradeStation definitely glitched on me right there. I hate when they do that. Alright, so I'm going to go short here. And I am going to do, we'll do the open price. We'll do 5109 as my stop loss. Alrighty. And because this came down without breaking back to an old resistance, and then this came up without breaking down to an old resistance, we're going to go ahead and expect this to come down doing the same thing. Nice and easy. The question that we have to ask ourselves is it going to break through this low right here? So let's go ahead and give that a line as well. And so what you need to do when you're trading like this is don't set a price for when you're going to take your profit. What you should really do is let it play out, and if it daggers down to your line, let it try to break through your line and see if it keeps running. Where if it breaks down to your line and then starts to recover and you're not sure, then just go ahead and take a profit close to that line that you were expecting anyways. But if it like just plays right here and then starts daggering, like I gotta let it try to break through that line. So again, we get a downward price action from 5106 to 50.99, and now we're getting some chop. And so, what do we say about the chop? Well, whatever direction it just went, if it starts to chop, bet the same direction. There we go, just hit newer lows from this trend. Now we might break through this little resistance right here. Gonna take that profit, let it come back up, and then sell another one. Okay, short again. Close this position. 5106. Okay, so we're short again right here at 5100. I don't love seeing that break to a new high. Perfect. Come back down. Come back down. Go. Getting our downtrend. Might need to take a profit here. It's not going to do that. We'll take that profit and look to get it short again. Short again. Okay. Got some issues, trade station. I wish you'd fix yourself. Alrighty. So we're breaking down to new lows. Not new lows, but new lows from the trend. I'm not too worried about this recovery. Appears to be fake to me. I don't see any reason why that should bust back through, and it's a fake, it looks like. See what happens. I guess we did hit somewhere in this resistance bubble right here, but that doesn't necessarily mean much. Like if it breaks 5102, I'll probably just close it out. As long as it's lower highs, I don't really care how much it wants to try to do this crap. And it's about as high as I can let it go. Let's see what happens. Alright. I'm gonna close out right there. Got a $10 loss on that one, $15 loss. And I'm gonna let it decide where it wants to go. We do have definitely a break in trend, so upside is looking huge right now. See it coming below this resistance right here and then breaking above this one. It's a pretty big trend break. I think I want to be long. I'm just curious to know how short I should let it go first. Alright. Oh man, it didn't fit. There we go. Alright. And we'll do 50.95. Upside. Come on, breakthrough. Breakthrough. Break through that resistance. And then break through the open. That's what we want to see. You can do it. I mean, if you look, we got lower or higher lows over and over and over. We've seen a trend break, and so with that break in trend, might as well go with it. How high could it go? I really don't know right now. Probably pretty high if we're being honest. Or pretty low if it decides to break down. so on this time frame, if we look at this run up to this down to this up, that actually makes it look like it's going down. Crap. That does not make me love my position. Why? Because we had the trend break, I guess, is why I like the long. I'm gonna close out because I don't know. When I look at this pattern right here, it would say probably down. Hold on. So this was the open. We come down, then we go up and up. Then we come down and then up. Upside is looking strong still. Alright, you convinced me. Feels like we're about to have a breakout to the upside. But am I exaggerating that? I don't think so. Nah, it's going up. Alright, so from here, because we just played with this bottom right here, then we came and hit the support right here. And now we're up again. Like, I just feel like it's gonna run up from here. Don't really have interest in fucking around with anything else. As far as how much could it run up, well, we're at, so the all-time high for the day is, it says 51.20, but that's bullshit. It's 51.10. I definitely think we're breaking 51.20 though. I don't see how I can sell anything right here. So what we should really be expecting right here is a giant run up, like a glitchy looking run up, and then a chop, and then another run up would be the most likely thing that I'm expecting. So kind of like this guy to this guy on the downside. We're going to expect that on the upside. But since we're so close to the open, if the, like, because the credits opened at $35 for the options on the SPX, it's like there's no way this $20 movement from the open is our maximum movement. And so if we start running to the upside, like, honestly, we should be thinking $30-$40 on the upside, but let's see how it plays out. Let's not go lower than this. Come on. Bounce off of that motherfucker. Bounce. Uh-oh. bounced off this resistance. Now we're bouncing off this resistance. And these are all upside resistances that we're bouncing off of. Let's see if we can't do it one more time. Bounce. We got Jerome Powell talking in a couple hours. What time's that happen? It's 7:19 right now. Damn, it's not even the first hour's not even over yet. Jerome Powell's talking at like 12:30, I think, which is Eastern time, so like 9, so maybe 2 hours from now. There you go. Heard that bounce we were talking about? Don't stop. All that aggression to the downside. You see how like aggressive it looks, and it never went lower than this candlestick or lower than these over here. So it's like it's looking like it's just like daggering down, but it really not. And then I had to go and ruin it. Come on. Back to the upside. Come on. Up, up, oof. Up, up. Brutal. Alright, it filled me out there. It's probably where I should go long, though. I really don't like not being long right there. Do 5096. Alright, is there any reason to think it's going downside? We just went down, we did a chop, we went down again. As far as the patterns go, that would suggest that we've done the one, chop, two. Then we had a one, then we had a 1, 2. Just hopefully this was the bottom. Come on. Come on. You can go green, little birdie. I'll allow it. A 1, 2, 3, 4, 5. Alrighty. Now run. Oof. Alrighty. Alright, now we're running. Let's keep it going. Finish strong. Oof. Just keeps on wiping it away. Damn. Now it definitely looked like it going down. So we did 1, then 2, then a chop, and a 3. Hmm. 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 And now it's going long. We'll wait for one more back train. Bro, you did not just go stop me out to not freaking keep coming down. I mean, really, we're just right back to the chop zone. It's pretty hard not to short. Okay, roaring. Like, I feel like I'm not getting a good image of what's happening here. So, come down, we break off this guy, then we go up, then we come down, then we come down. Just make a couple dollars at a time. Let's break through to the bottom. Looks like it wants to go all the way back down, but maybe not all the way back down, so we'll take a profit there. I mean, right there should actually be a good time to go long. That's 50.90, that's 50.87, so we'll do 50.85. Definitely giving back some of my profits today, but that's okay. I think we're gonna make it work. I think we're gonna make it work. There's that breakdown to this resistance, which we kind of expected. And now we're running up. And if we look at this guy again, just down, 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 all straight down. So for me, it's all straight back up. Like, this is not a spot where I would be scalping. I just want to make the monies. Run, run, run. Like this right here just did one boom, 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 boom. And then this right here went boom, 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 boom. Like these are basically identical. And what happened? It went straight up. So we'll see. We shall see. Is this resistance strong? It is really playing with that resistance level. Every candle. Oh, there it breaks through. And now it's right at the low that we hit earlier today. Wow, are you really breaking to a new low? I wouldn't have thought so. not think so. A super fake. And away we go. Come on, Greenside. There you go. Starting to do something. Or are you faking me out again? Let's see. Let's see. We did get a chop, and so that would. Oh man. See, that almost wants to suggest downside, but with this little dagger down here, I don't think so. I don't think so. Start. I'll finish strong. All the way through. All the way through. Man. Is it really still going down today? Sure is. Damn. Down $6 on the day now. Fuck. I hate losing like that. Alright. So we got 1, 2, 3, no, 4. Like, I just don't see the pattern for it to keep going down right here. I really don't. I'll take another look, but for now, we've got this to be a that, then we get that. I mean, maybe the downside is actually going to be strong F. Let's see what happens there. something to suggest that. So from the open, we went from 52.08, 51.08 to 50.80. And 50.80 is $28. Something. Finally, looks like it's starting to have a recovery. Let's see if it's for real. With a long, nasty downtrend. Very nasty. Alright, well, at this point, I don't think I can sell at any price. You see where it's coming down right here and then it chopped? I should have known it was coming down another $10, but I was fighting myself. That's okay. We're in an okay spot. We got all day. Time to make it right. Take the profit there, expect it to come back down. Down $1 for today. I'm not sure how I fucked it up because a lot of this seemed obvious. And I really gotta start trusting my chop metric more. Because there's a lot of reasons I think it's gonna bounce off this resistance here. But as soon as it started chopping, 1, 2, 3, 4, 5 minutes of just at the same price. If it has come down, then I should assume it's gonna keep coming down. Alright, now we're hitting. It's probably down to here I'll go long. Not expect it to hit. Actually, maybe we should expect it to come down here. But I'm definitely not betting on it. Just waiting for a good entry price to go long again, because this does not look like a chart that is is determined to go down like yesterday. This looks much different than yesterday. Convincing me. See if we can't get one pullback. Pullback. Alright, you convinced me. You're not pulling back. Let's see if I'm wrong. Wait for a pullback. Go long again. Back to an $8 profit. Probably broke even after all my fees. Oh, it's breaking high. Come on, give me one pullback. One more pullback. Come on. Damn it. Why did I get out? Come on, give me a pullback. Pull back. Pull back. Good enough. Unless that was the trap. Now we good. Weak. Weak. Definitely want to go long right there. It's what I should have waited for. Alright, recover. Let me see your games. Alright, so today looks like it's going to be a sideways day. The big green day is probably tomorrow. I guess it could change once Jerome Powell starts talking. Oh, brutal. Bro, you can't go lower than that. Stop right there. Like in theory, it can come all the way back to the low, but we're really hoping it uses this support of this green candle. Alrighty, what's gonna happen here? Alright, so we are getting some pullbacks. So probably here. 50.96, I'll take a profit. Maybe 50.97, I'll take a profit, and then wait for a pullback, I believe. Probably should just take it at this line. Come on already. Fucking slow ass market. Taking your sweet ass time, aren't you? taking for fucking ever to do something. Oh, man. Chop, man. Choppy, choppy, choppy. With that much chop and me assuming it is going up, and like we were going up and then we chopped, and so we're assuming up anyways by that logic. That was a lot of fucking chop. And so I just getting a feeling that this green could be a lot of fucking green. I just find it hard to believe we went through all this chop just to go green and chop again right here. Like maybe we could chop up here. Maybe. Maybe right here. Damn, I got in long way too early here. I'm just breaking even. That's not good. That is me being not patient. Finally green. Hmm. 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 Fucking move, bitch. God, you're being boring. Boring F. Gonna create a whole new leg of fucking chop right here? God damn. There you go. Some green action. what, 7:40 and now it's 8:20. Okay. Oh bullcrap. Oh bullcrap. Alright. I'll believe it for a second. Come on. Green machine. Really, bruh? Really, bruh? You gonna shut down on me while I'm in the middle of a position? That's cool. Cool story, bro. And bruh, if I click on you and I click end task on my task manager, I expect you to fucking close out immediately. Like, come the fuck on. Bruh. The fuck? Stupid ass trade station. Can't fucking do this to me. How are we looking? Should I take a profit? Not really. Maybe. Alright. I cashed that one out for a profit. Now I need my fucking trade station to work. Bruh. Get the fuck out of here. Like, what more do I gotta do than end task? Fucking close it. Like, if my computer can't end the task, what fucking can? Finally. Stupid motherfucker. Damn. Trying to fuck with me, doggy. Alrighty. Alright, we're gonna go to chart analysis. Try it out. Alright, we're up $43 on the day. Wow, way too many fucking trades though. That is ugly looking. Don't even want to see it right now. Alrighty. Trade bar. Oh, I got rid of all my fucking lines. Bro. Oh, it's on the 5. There we go. Oh, okay. There we go. Drawings. Horizontal. 630 is right here. Okay. Then we'll do horizontal. One right there. Horizontal. One right there. Horizontal. One down here. Red. Red. Alright, I'm back. So, we are getting some down, but not as much as I'd like, but should be okay either way. Looks like we might have one more trend. $8. That's pretty good. Alright, I think we got one more uptrend. Probably about 5102. And then I think we get a nice downtrend into the Jerome Powell speech. That's what I'm seeing. I know you're not saying you're on the fucking 2 minute. I've never put 2 minute in my fucking life. The fuck is that? Alright, let's see here. So we went up once, twice, 3, 4 times. And then that guy is right there, so technically we could have hit the high already. I don't think so, though. I think we still got time. Give it a little juice. Use a boost to get through. Damn, all the way back down. Nah. Maybe. If it does come down, it's still gonna come back. Not loving what I'm seeing, so I'm just gonna wait for it to come back up here, and then I'm gonna short it. I think. So we got this guy, then we got this guy, then we got this guy, then we got this guy. It's looking like a decent short. Here's the last high. I believe. Damn it, Barbie. back up a little bit before I short again. But I am thinking this is the top, and so maybe I can get in at like 51 hundo. Short at 51 hundo is where I'm at. As soon as he gets there. I am prepared for it to come up to here. Just not that worried about it. Now it's looking like we have not hit the high. So hopefully I get one more pullback to get out of this short position. And then I'll go long. Bummer. Bummer, bummer. Stop doing this to me. Can't you just fucking be normal? Stupid piece of shit. We're expecting downward movement from here for sure. Question is how much? Damn, maybe not. Bruh, that's more than enough. Down $10. Fuck. Now what? We just broke all-time highs, or new highs for the day. It's up, then it's down, then it's up, then it's down, then it's up, then it's down. What's up? What about that looks? Just stop doing that. Okay. Back to a profit for the day. pretty convincing. Damn, you going straight down? To where? Damn. Should have got all of that. What's wrong with me? How low could you go? This Powell talk. Today Tuesday? Oh, yeah. Wait, Powell talks tomorrow or today? It's like tomorrow. Alright. Well, from here, I think this is a good
yesterday. Now, we look at this article right here. Stock market pullbacks are price of admission, says strategist who expects bumpy gains. And I want to caution you guys, if you think the stock market is going to continue to crash lower, the top is in. We can never go higher. I want you guys to remember, we are in earnings season, so yes, we have a lot of bad news to contend with. Yes, there's tensions in the Middle East. Yes, oil has been rocketing to the moon. Yes, gold has been going up. There's a lot to worry about. The question is, can the stock market climb the wall of worry? This morning, we have Bank of America out, we have United Healthcare, we have PNC out. We have a lot of earnings starting to come out after the bell. You want to keep your eye on UAL, United Airlines, because when we look at the expected move, United Airlines is expected to move plus or minus 9%. Now, if you trade options, let me know, will you guys be playing United Airlines today or not? Let me know in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Also, want to remind you guys, we're going to be doing another cash giveaway this week. If you want to be eligible for it, you have to make sure that you like all the videos from this week. You leave a comment on all the videos from this week, as we're going to pick a random winner from one of the videos this week. And you must be subscribed to the email list, so if you're the lucky winner, I have a way to reach out to you and send you your prize. Now, before we look at a chart of Bank of America, we can see yesterday gapping up only to come back lower. Now, pre-market, Bank of America is up a whopping 5 cents. So yes, Bank of America had earnings and they topped their estimates on better than expected interest and investment banking. However, we're not seeing that really flow into the stock just yet. But when we jump over and take a look at United Healthcare, notice we are already over halfway into that massive gap. Right now, pre-market, United Healthcare is up 7.29%. When we look at what CBC has, it says United Health beats on revenue despite impact from cyber attacks. So United Healthcare stock has been getting pummeled, and we can see we do have an ABC pattern on the way down, but we have two large gaps. The one gap which is closer to us,
love that.
489.62. Then we have the next gap up here about 513.51. Now, one thing to note, right here, the closest gap, we have a lot of volume on this profile, but if indeed we can push to the other side of this volume, the next stop will really be about 504. Then I want to go ahead and see, can we push all the way over here to build the gap? Now, one thing we don't want to see is something like what we see over here from the UK. UK sees biggest jobless rise since the pandemic. Now, that is not what we want to see. We do not want to see the labor market starting to weaken, at least not if you're a bull in the market. If you're very like, come on, baby, bring it on, you're going to send stocks back down to normal valuations. Now, we look right here, gold to shine bright like a diamond, hit 3,000 within months, says Citigroup. And we come over and we take a look at the precious metal. We see last night, gold was actually trying to push up once again. Right now, pre-market gold is only up $6.40. Now, we look at this on the 5-minute chart. We can see that essentially last night when the market's open, it ran up a little bit, and then we had a lot of consolidation. And now we're starting to pull back a bit. Now, a couple things that we need to pay very close attention to. And no, it's not stocks like Nvidia or even SSI. Hey, we want to be very, very mindful of what the dollar index is doing. We look at the dollar index, we can see we have kind of a shooting star type of candle trying to form at this moment. However, the market is not closed. For all we know, we can come all the way up here, filling the ABC completion at 106.64. Also, we need to pay very close attention to the volatility index. Last night, we seen it spike up, make another recent high, currently down 3.3%. Now, on Friday, the VIX was up more than 10%, which indicated that either Monday or Tuesday was likely going to be an update in the market. And then yesterday, the VIX was up more than 10% again, which also indicates today or now Wednesday is likely going to be an update in the market. Now, it may just be where we just barely are above break even. That's just a stat that normally won't hold true. Now, we really want to pay close attention to the volatility index today, the dollar index, but let's not take our eye off the 10-year yield. The 10-year yield has been on the rise lately, and that has been causing a lot of problems, especially for the small caps like the Russell 2000. We can see the Russell 2000 has definitively broken below the rising trend line, but now we come down towards the point of control. So now, this is going to be a decision point. Do we simply bounce and start heading back up, or do we start flushing back down to the next high volume area, which comes in about 184? You look over here at the MACD indicator, it is very bearish at this moment. We have a bearish separation of the lines, and we're starting to break below the zero line at this moment. Now, look at the Russell on the 30-minute chart. What do we see? Well, yesterday was just an absolute devastation. We gapped up, boom, we filled the gap, we just went down ever since the open for the most part. Now, we do have a gap all the way up here at a price point of 206. Now, do I think we're likely to hit that price point today? Probably not, but anything is possible. We look over here at the MACD indicator. What do we see? We're trying to cross and curl up. We can make the case that we actually have a MACD divergence playing out. And what I mean by that is, if you look at the low over here on the MACD indicator, it's slightly lower than where we are now, but this low over here is correlated with a much higher low than where we're currently at this moment. So that is something that we want to take note of and see, can we build upon that? Right now, the Russell 2000 is still the only indice in the red at this moment. Now, remind everybody, Apex had a massive 80% sale off all your valuation accounts, passing as little as 1 day. If you want to take advantage of this offer, use the link in the description box down below and use the promo code MikeDad at checkout. Now, we come over and look at the fear index. You can see we're all the way down at 39. We're in fear territory, and it's been a while since we've been back in fear territory. And anywhere in this area normally is good buying opportunities. Now, does that mean today just go ahead, rush in, YOLO, all in? No, that's not what I'm saying. But now we're starting to get to some interesting areas on the chart. These are areas where we can start to see bounces in the market. For instance, we look over here at the diamonds. The diamonds have come back down towards this consolidation area. We haven't quite hit the point of control just yet. Then, when we go ahead and we measure from the high all the way down here to the low yesterday, we can see the diamonds have dropped roughly 5.5%. Now, normally we get a 5 to 10% correction once the
Staying long here.
We just simply start to try to either consolidate, bounce and go higher, or we're going to flush and start working our way down towards some of these even lower prices. And a lot of this is going to hinge on what is going to go on over here in the Middle East. If the tensions can start to simmer, then stocks have a chance to rebound a bit. Now, we look at the economic calendar for today, 8:30 a.m. We have building permits, we have housing starts, and we have a slew of FOMC members making the rounds today. At 9 a.m., we have Jefferson is going to speak. Then at 9:15, we have industrial productions month over month. Then at 12:30, Williams is going to be speaking. Then at 1 o'clock, Barkin is going to be barking. Then at 1:15, the big kahuna, the man himself, Jay Powell, is going to be taking the podium. And we're going to come out and see, will the recent developments in the market force Jay Powell to talk a little bit more dovish, or is he going to keep on being hawkish in the market? Let me know in the comment section down below. Do you think Jay Powell is going to be hawkish or dovish today? Can Jay Powell save the markets today? Now, if we look at QQQs, definitively, we have broken the rising trend line, and we're right down into this minus development area. This is an area where the market could essentially bounce and reject out of that zone. However, some of the key levels I do want to focus on to the downside, 425.69, and then down here towards about 409. So things start to get ugly out here. These could provide additional targets for us. The MACD indicator is still horrible on the daily chart. On the 1 hour chart, just like bloodbath yesterday, we basically, gapped up, boom, slammed down. Now we do have a large gap all the way up here, and then we have to rally all the way to 445.40 in order to come up here, fill in the gap. However, I don't know that we're going to make it all the way up there today. We have to see some fantastic news, which will probably have gold tumbling lower, crude oil falling off a cliff. And we look at the 30-minute charts. What are we anticipating for today? Well, we basically have a B as in boy shaped profile, but if you look, we have very poor market structure. Look how thin the profile is all along this area. And one of the areas I am watching, look at the swing point that we had over here at about 436. You can see we sliced through it, we closed below it, and we have failed to come back and retest that level. So if indeed the buyer step in today, this could be an area that could provide a target location. This could also be an area where the market makes it up and we simply reverse and go back lower. Now we look at the value areas. Value area low will be down here about 430.22. The point of control will be about 431.42, and value area high is going to be all the way up here about 437.97. Now, as we're looking at this, what am I expecting? Well, one, as long as we stay above value area low, I do want to give the bulls the benefit of the doubt. The markets are oversold on an intraday basis, not on a daily basis, but on an intraday basis, we are starting to get oversold in these markets. buckets, and that could indicate that we get a bounce. Now, if indeed we are going to bounce, one of the target locations I would want to focus on would be about 432.72, kind of this little distribution node right before we get into this minus development area. The next target would be the low over here, about 436. Now, if we can breach above that, value area high then becomes highly probable, and then up here, maybe somewhere in the ballpark of about 440.11. I'm going to go ahead and map this out. If we make it all the way up here, this is where I'd be very interested in a potential reversal in the market. I know that would be one heck of a move, but if we grab our Fibonacci retracement tool, we measure from the swing high all the way down to the swing low. You can see that level comes in right near the 61.8. If we want to grab and actually measure from yesterday's high down to the low, that would be just above the 78.6. And looking at the Fibonacci retracements, if we get above the 78.6, it really increases the odds. We are likely to rally all the way back up towards the 100% retracement. Now, we look at the Nasdaq out here in the futures market. You see quite a bit of volume has been built out on the composite profile. Now, we're down here at these lower levels, but you can see we quickly slice through all these swing points out here yesterday. Now, the question is, do we come back up and try to test some of those levels and a retest? If we start just to get a normal bounce in the market, I'm really looking anywhere from this wick over here up here into the candle bodies for a potential target zone, which comes in anywhere from about 18,000 to about 18,150. Now, in that zone, I want to be vigilant. I want to see, do we get in the zone and then we reject and come back down? If we can get on the other side of the zone, then I'm going to really be focused on this high volume area. Now, when we look at the 30-minute volume profile levels, look at what we had last night. We formed a very, very perfect D-shaped profile, and we've done a lot of just back and forth, back and forth. Now, think about this. Contraction leads to expansion. So all of this is nothing more than calls being built. We can see the very poor market structure all along the volume profile chart along here. Look how thin the structure is in the market. Now, one of the areas I do want to focus on, because as long as we are above value area low, I want to lean on the buy side of the market. Now, the overnight volume profile levels would take precedence over that. However, as long as we are above 17,841.50, I want to have some type of bullish bias in my mind. And one of the targets I want to focus on would be right here in the ballpark of 17,954. Above that would be the next high volume node, which comes in about 18,100, which will put us right within that zone that we just mapped out on the 4-hour chart. Now, when we look at the SPY, we can see we've had the nice roll effect. The MACD indicator getting ugly, and on the weekly chart, the MACD indicator is just now starting to cross over. This could be very, very dangerous because a lot of times when we're elevated on the MACD indicator, especially on a weekly chart, once you get the cross, it can be a very large move. Think about it. The higher the time frame, the larger the move. Now, the last time the MACD indicator was above the zero line, we had the roll effect was right over here. And if we measure from the high all the way down here towards the low, we essentially dropped 11% during that correction. Are we going to suffer a similar fate this time, or are we going to be able to get bid back up? One thing to note, we also want to grab our Fibonacci retracement. We want to measure out here from that move that we've had from late October until March, and you can see the 38% retracement comes in at 480.70. And if that's all we come down towards is a 38% retracement, and then we rally up, that is a minor retracement. What could still be a very bullish phase of the market. And if we measure from the all-time high down towards that level, that is only an 8.5% drop roughly. Now, we look at the 30-minute charts. What do we see? Kind of a B-ish shaped profile, lowercase b. MACD indicator looks horrible, showing no signs of turning around at this moment. But who knows? Jay Powell could be the man, the myth, the legend that saves the day in the market. Let me know. Do you guys think Jay Powell is going to save the markets today? As we have value area low coming in down here at 503.57. We have the point of control coming in at 505.01. Value area high is going to be all the way up here at 511.46. Now, as long as we stay above value area low, I want to lean more towards the buy side of the market, and more specifically, I want to focus right here near the candle bodies to the candle wicks. This is a basic market structure that has been broken. We have failed to come back and test that zone at this moment. So this could be runner targets for the day, 509 to about 509.50-ish. Now, if we start breaking value area low, then we got to be open to the idea that, you know what, we're likely going to come all the way over here, fill in the gap at about 497.32. However, when we look out here on the composite profile, we have a lot of volume being built, somewhere in the ballpark of about 474, which is really substantially lower from the current prices. Now, as we look at the S&P on the composite profile, you can see we had, two lower hammer candles. We're trying to get a rejection up and out. Now, on the weekly profile, you can see we also have a minus development area all along this profile. Now, we're likely to come back in auction. The question is, do we get a rejection back down? And we also have a little swing point that I am watching right here, right? Swing candle wick to the candle body. Can we make it back up towards that level for a retest, which really comes in from about 51.50 all the way up here to about 51.63? This could be a nice, juicy target, and we measure the Fibonacci retracement from the swing high down to the swing low. Notice this little zone matches up right between the 50 and 61.8 Fibonacci levels. Now, on the 4-hour chart, we have a high, lower high, lower high, lower high, lower high. When we come up here in the zone and produce another lower high in the market, you can see we also have a series of lower lows. Here's a low, lower low, lower low, lower low, and a lower low was made out here yesterday. So, in context, we are currently in a downtrend on the 4-hour chart. Now, we look out here on the daily chart. What do we see? Well, right now we are currently above value low at 5,094, which means we've already been below it. Now we are back above it. So, was that set up? A volume profile rotation trade. Target 1 was 51.08. That target has already been hit. So now, what the volume profile rotation says is we are likely to rotate all the way back up to value area high. Now, does that mean we're going to make it up there? No, it does not. And look at that zone that we draw out on the 4-hour chart. It kind of encompasses right near this high volume spike or this high volume distribution area of the profile. So this right here is going to be a nice, juicy target today if indeed we can stay above the value areas, which comes in at 51.56. I have that level marked off on your chart. We also have a huge minus development area, which starts 51.27 all the way up to about 51.53. Now, one thing to note, if you're looking for additional targets, one of the areas you can target is right up here towards the bottom of the minus development area at about 127. That could be a target, and then try to target all the way up here towards this area we mapped out on the 4-hour chart, and then also that 51.57 price point. Now, we look at the economic counter for today. We have building permits come out, 146 versus 151, dropping down from the previous at 152. Also, housing starts 132 versus 148, previously 155. So, not good news on the economic front that we've seen this morning. We saw the dollar index initially drop lower. Now, what is bad news, now good news for the market, meaning as more bad news comes out, that increases the likelihood that we are then going to see Jay Powell and the Fed starting to slash interest rates. And we look at the Nasdaq, we look at the overnight volume profile levels. We have value area high coming up here about 17,892.25. The point of control is 17,865.25, and value area low will be 17,839.75. Now, one thing to note, as long as we are now above value area high, I then want to go ahead and play all the targets that we talked about earlier. But note, if we start coming back down below value area high, then I want to look for sell side opportunities targeting the point of control, value area low, and then maybe even the low of the overnight session. But one thing I'd warn you about, right? Essentially, last night in Asia, we had the low. Then pre-New York, we come down here and we basically test out that low. Is that all she wrote? Is this the double bottom? That now we're going to come up here and have some upside testing, possibly hitting one of those targets that we talked about moments ago. We come over and we look at the S&P 500. What do we see? Value area high coming in at a price point of 5105.75. The point of control, 5,099.50, and value area low, we're coming in at 5,089.00. Now, note, we are currently above value area high. So as long as we stay above it, I want to continue to focus on higher prices. So if we start dropping below 5106, sorry about that, then I want to target the point of control. Then I want to target back down towards value area low. Then I want to target the overnight lows. But remember, all right, we have the potential for a big move up all the way up to 5157. Do you guys think we'll hit that level today? Let me know your thoughts in the comment section down below. And if you guys want to learn advanced ATM strategies for the Ninja Trader 8 platform, watch this video right here.
They keep saying Jerome Powell's talking today, but it looks like on the calendar it says it's tomorrow. Oh, maybe I was looking at the wrong date. That's probably what it was. Let's check that one more time. Today's the 16th. Okay, so Jerome Powell's at 1:15, which is not too far away. Right now it's 12, so 1 hour until Jerome Powell speaks. theta on those 1 day to expire options still. It looks like we're going green. Guess it's technically possible we could still come down from here. But the way that this went, it doesn't look like it. It should have been more choppy if it was going down. This isn't doing the chop chop. Let's go, motherfucker. Let's go, motherfucker. Today, Junior. All the way up. And they say go all the way up. Go. That's a good start. Don't you dare go red. Your job's to go green. It's crazy the options are still at freaking 30. There's going to be a big movement when Jerome Powell hits the stage, that's for sure. Hopefully it don't move against him. There's a good reason to think it might come back down. But what do we think? Sell up here and then assume it's going to crash one more time before Jerome Powell speaks? Sounds about right. And I'm just kind of making that up, but it seems like a way they might want to play it if today's going to be big green like they keep saying. Cool story, bro. Cool story. All the green you got for me? so. Spooky, spooky. fear wick. Time to reverse, reverse. Let's go. $30 till Jerome Powell. It's a lot of fucking chop right there. From 9:10 till now, 45 minutes of 35 minutes of fucking chop. Finally breaking through. Hard to believe that one's a fake out. Let's listen to a little music until Jerome. Little music till Jerome. mysterious world. God moves in a mysterious way, His wonders to perform. He plants His footsteps in the sea, and rides upon the storm. He gives His fresh courage take, but He's so much dread. Are big with mercy and shall break, and blessings on your head. His purposes will ripen fast, unfolding every hour. Have a bitter taste, but sweet will be the flower. Belief is sure to err, and scan His works in vain. God is His own interpreter, and He will make it plain. If you could hide to cold love in the twinkling of an eye, and continue onward, that same speed to fly, do you think that you could ever find out one generation where God see the grand beginning, where space did not extend. Creation, God's unmatter end. Methinks the Spirit whispers, and has found pure space. The outside curtain, nothing has a place. in a mysterious way, so wonders to perform. So mercy rides upon the storm. No seems to suit each day. With blessings on your head, will ripen fast, unfolding every hour. The bitter taste, but sweet will be the flower. Unbelief is sure to err and scan his works in vain. God is his own interpreter, and he will make it plain. The time is far spent, there is little remaining. Publish glad tidings by sea and by land. Hasting the heralds forward proclaiming, repent, for the kingdom of heaven's at hand. Repent, for the kingdom of heaven's at hand. From your duty, however unpleasant, leave your pattern and friend. So painful at present, weeping with the righteous in glory will end. Here long with the righteous in glory will end. Though with the favor of Ammon possessing world's bitter hate, you are called to endure. Angels are waiting to crown you with blessings. Forward, be faithful, the promise is sure. Go forward, be faithful, the promise is sure. Be fixed in your purpose, for Satan will try you. Weight of your calling he perfectly knows. Path may be thorny, but Jesus is nigh you. Is sufficient, yet demons oppose. Is sufficient, though demons oppose. 15 minutes till Jerome. On the Lord's side, who? Now's the time to show. We ask it fearlessly. Who's on the Lord's side, who? The common war, the common foe. Enemies awake. Who's on the Lord's side, who? time to show. We ask you fearlessly, who's on the Lord's side? Who in God and want his foes to know that if but few were great, who's on the Lord's side? Who run to win? This is my next body spot. His flag, who's on the Lord's side? Who's on the Lord's side? Who? I got such a bad feel. Damn it, I shouldn't have fucking missed that. How did I miss that? I fucking suck. I was long and I just said I wanted to get a better fill. Why would I say that? I was a pretty good fill. Fuck me, man. It's okay. Should get a back trend before Pal speaks. Alright, we'll just wait. Fuck, man, I should hit all of that. What's wrong with me? Working against myself. Alright, I'm convinced. I'm back. Back to Earth.
I tack on a fourth attribute to that. We are one of the few think tanks in the United States that has a program dedicated entirely to the study of Canada and the U.S.-Canada relationship. And now today, with the launch of the forum, I'm proud to say that we are one of the only think tanks in Washington, in the nation's capital, with a sustained initiative on the expansive Canada-U.S. economic relationship. And we are so pleased that all of you are here today in the room and online to join us in celebrating the start of this special initiative. Now, we have a great program. I won't get in front of the men on stage here. So to kick things off, I'd like to introduce someone who can tell you a little bit more about the forum. He is the former vice chair of the Federal Reserve Board for Supervision, former undersecretary for domestic finance at the Department of Treasury, and the current co-chair of the Washington Forum. Ladies and gentlemen, please welcome Mr. Randy Quarles.
Thank you. Thanks, Avi. Thanks, everyone, for being here today at the Wilson Center's Canada Institute, both in person and through the miracle of the internet. Today's the opening event of the Canada Institute's Washington Forum on the Canadian economy, as Avi said, and the objective of the forum is to educate U.S. policymakers and business leaders and the public on the dynamics of the Canadian economy and on the importance of our two countries' close economic relationship. Countries, like people, accomplish the most when they set clear priorities based on data, and any dispassionate review of the data shows that one of the very highest economic priorities for the United States has to be our relationship with Canada. Now, a lot of the discussion about the U.S.-Canada relationship tends to focus on its importance for Canada. Trudeau the Elder's famous comment about sleeping with an elephant. But Canada is our largest export market. Almost 20% of everything that we in the United States send abroad into this world of 8 billion people goes to the 40 million people in Canada, who are only 1/2 of 1% of the world. It is the largest and most comprehensive two-way economic relationship among any two countries in the world. The evolution of the energy economy of global importance will be heavily influenced, perhaps determined, by decisions that our two energy-producing nations make. We have a unique role in being advanced financial economies, using a lot of energy, but also significant energy producers, and can balance the effects on economy and society of the choices that we make. And on top of that, Canada is a key U.S. ally in the international financial architecture. I spent 3 different tours of duty in government service, where a big chunk of my job was international financial diplomacy, and we could always count on the Canadians being sane, solid, and punching way above their weight. And yet the U.S. tends to take it for granted. And my experience in life is that the good things we take for granted, we tend to mess up. So my hope is that with this series of events, we can be part of helping focus folks in the United States on the importance to the U.S. of this relationship by finding speakers and topics that will have a very broad appeal beyond the usual suspects who focus on our relationship with Canada. And we certainly have that with our event today, which includes 3 of the most significant economic leaders of our two countries. Bill Morneau, our moderator today, is, well, when you look in Wikipedia under Renaissance Man, there is an inset photo of Bill Morneau and nobody else. Recognizing his significant achievements across politics and policy and business and philanthropy, he's the former finance minister of Canada, playing a key role in shaping sustainable economic policies of the Trudeau administration, including Canada's economic response to COVID-19, and a key reason for Canada's aforementioned above-weight punching in international diplomacy. As a business leader, he grew the multinational human resources firm Morneau Chapnell from a family business to over 4,000 employees and the largest human resources provider in Canada. As a philanthropist, he's worked to support the arts, help at-risk youth, improve access to health care and education all around the world, including founding a school for Somali and Sudanese girls in a UN refugee camp in Kenya. And as a policy thinker, in addition to his role chairing this Washington Forum, he's chaired the C.D. Howe Institute, a leading Canadian think tank, and has written Where to From Here, a policy book that it is several cuts above the typical former official's post-service book. I put it up there with Robert Rubin's In an Uncertain World. Anyone who has ever served in any government of any country at any level at any time will immediately recognize the honesty and intelligence and savvy that he's brought to thinking about lessons of his time in office for the issues facing Canada and all of us. I highly urge all of you to read it. Tiff Macklem is the governor of the Bank of Canada, and another of the reasons for Canada's substantial above-weight punching in the world. In addition to his role as governor, he's the chair of the group of governors and heads of bank supervision. That's the oversight body of the Basel Committee, rather high profile these days, and he is co-chair of the Financial Stability Board's regional consultative group for the Americas. He's a distinguished economist, having headed the most important division of the bank's economic staff in the early 2000s, having played a critical role in Canada's response to the great financial crisis in his post in the Canadian Finance Ministry in the mid-2000s. He's been a senior deputy governor of the bank from 2010 until his appointment as governor. He's also been a distinguished academic, having served as dean of the Rotman School of Management at the University of Toronto. And our final panelist is Jerome Powell, chair of the Board of Governors of the Federal Reserve System. It is a weird task to
Right as they introduce Jerome,
like
we start getting to the new
How do you do it without looking
back
absurd?
to the highs.
His doctoral thesis on Metternich
I like
received
it.
very high marks.
Go.
So just let me say this. There is an anteroom off the main boardroom in the Eccles building, which is the Fed's true headquarters building. They're currently slumming it in an annex, where the portraits of all the Fed's chairmen hang. And as you look around them, it is borne in on you that none of them will have been as consequential across as broad a range of matters as Jerome Hayden Powell in managing the remarkably low inflation and high employment of the pre-COVID period, in the world historical response to both nationally and globally to the COVID event, in the first major review and explanation of a formal monetary policy framework for the Fed, and in managing the quite effective response to the most significant inflation in almost half a century, but one in which many of the traditional guideposts could not be helpful, requiring very creative thinking and deft management of the extremely well-meaning but hydra-headed body that is the Federal Open Market Committee. So with that, let me thank you again for coming, and let's turn to our panel.
Well, I want to start by thanking you, Randy, for that very, very generous set of introductions, and also for your willingness to step forward as the co-chair of the Washington Forum on the Canadian Economy. So we very much appreciate your esteemed leadership, and one of the key reasons we're here today is due to that. So really appreciate it. I'll just say personally, one of the things I liked most is you said Canadians were sane. So that's a pretty good starting point, I think, for our discussion here today. So with two esteemed panelists, I won't really be speaking much. I want to give both of you gentlemen an opportunity to talk a little bit about your respective economies, and I guess also recognize that we're here to talk about the Canada-U.S. relationship and what is both distinct and different about our economies, but also what we share. So maybe with that, I could start with you, Governor Macklem, and then we'll talk to Governor or Chair Powell.
Well, thanks, Bill, and I think you better call me Tiff. It is a pleasure to be here, and thank you and Randy for launching this, for inviting us both. I am very pleased to be here to say a few words about the Canadian experience, and I always enjoy comparing notes with Chairman Powell. Now, as Canadians, we invariably compare ourselves to Americans, and maybe it's human nature, but we tend to focus on the differences. We've got different systems of government. We're bilingual in Canada. We have 3-down football, and we even have very colorful polymer banknotes, and certainly our climates. I think are certainly the IMF meetings are always a welcome first blast of spring for the Canadians. Our economies obviously have much in common, but again, we often focus on the differences. If you look at growth in Canada and the United States over the 20 years leading up to COVID, remarkably, the average was exactly the same, average 2.2% in both countries. The sources of growth, though, have been a bit different. In Canada, we've grown more by adding workers. Our participation rate has risen more, and we've had proportionally higher rates of immigration. In the United States, adding workers has also been important, but increasing output per worker, or productivity, has made a relatively larger contribution. And I will admit, in Canada, we look at U.S. productivity growth with some envy. And we do ask ourselves, what can we learn from the U.S. experience? We are concerned about productivity growth in our country. Turning to the financial system, we both have strong banking systems, but the structure of our banking systems is quite different. In the United States, you've got a lot more banks than we do in Canada. In Canada, we have five large national banks and a number of important regional players. The structure of our mortgage market is also somewhat different. In Canada, the typical mortgage is 5 years. In the U.S., typical mortgage has a term of 30 years. And our banks in Canada tend to hold mortgages on their balance sheets. U.S. banks securitize a lot of their mortgages. Despite these differences, our systems are very integrated, and indeed, a number of large Canadian banks have large operations here in the United States. Our pandemic responses were also mixes of similarities and differences. Broadly speaking, the paths of our two economies were pretty similar. We both cut interest rates very dramatically to effectively zero to support the economy through the pandemic. Then we both raised them very forcefully as inflation rose rapidly, and we've both seen inflation come a long way back. Growth has been more resilient in the United States, though, through this tightening cycle, and I think that's partly related to the stronger productivity growth I mentioned in the United States. And it may also be related to the fact that monetary policy may be having a bigger impact on households in Canada because of the different structure of our mortgage market. More of our mortgages have reset in Canada, so more people are feeling those higher interest rates. And that has restrained household spending more in Canada. In each of our countries, I do want to underline that we gear our policy decisions to our domestic monetary policy mandates. And in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So, simply put, we don't have to do what the Fed does. We can do what Canada needs. I do think, though, we're looking at the same things and asking ourselves the same questions. I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate to reduce interest rates. Last week in Canada, we held our policy rate at 5%, where it's been since last summer. We did stress that we are encouraged by the recent progress we've seen on inflation, and we want to see it sustained. And just this morning, Statistics Canada published the March CPI. As expected, headline inflation came in close to 3%. We have seen gas prices in both our countries move up. Importantly, though, measures of core inflation did tick down again, and that does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time looking and understanding what is going on in the United States. The U.S. economy has a very big impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through in the last few years, because the more we understand what we have in common and our differences, the better we can learn from each other's experience. And let me just close on a few words on just how integrated the Canadian-U.S. economy is. And Randy, you highlighted some of the key facts. I would totally share your perspective. I think the economic relationship really is the model for mutually beneficial open trade and investment. 77% of Canadian exports flow to the United States, and as you underlined, what less people know is that Canada is the United States' biggest export market. 17%, or as you said, almost 20% of U.S. goods head north to Canada. If you look at foreign direct investment, there's a similar two-way dynamic. In 2022, more than half of Canadian FDI went to the United States by far the largest share of our FDI. That was roughly $43 billion. In the same year, $50 billion of U.S. FDI came to Canada. So it's a pretty balanced relationship. And I think what these numbers underline is just how close that economic relationship is and how it works in both directions. And the final thing I'll say is, when you look forward, we face many of the same structural challenges. Our labor forces are aging. there's going to be a big challenge with new technology, training, making sure we have the skilled workers our economies needs. Climate change is affecting both our economies. We're both grappling with shifting trade and investment patterns globally. Supply chains across both our countries need to build more resilience. Conflicts internationally are increasing global uncertainty. And for all these reasons, I am very glad we're having this discussion. We do have much in common, and Randy, as you underlined, when we work together, we can get a lot more done. Thank you.
Thanks. That's a great place to start. Chairman Powell, really interested in hearing your perspective.
Another place to start is to say, why don't you call me Jay and call Tiff?
Okay, I know I do it behind the scenes. I'll do it in front of the scenes too.
Great. So let me start by thanking Randy and Bill and Javi and Tiff for this. It's great to be here today. I want to echo what Randy said about the mutually beneficial, respectful, great relationship we have with Canada, economically, culturally, and I'd also like to echo, I thought Tiff did a great job talking about the similarities and differences in our economy, our financial markets, the challenges we face in our policy stance. It's almost as though you somehow had a copy of that part of my remarks, Tiff. So I'm not going to repeat that, but what I will do is talk, if I could, a little bit about the U.S. economy and where we find ourselves
Order
right now.
filled.
So, I think Randy pointed out, the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and
Order filled.
spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires, and broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real
Order
strength,
filled.
but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined
Fucking
quite
got me.
significantly over the second
You
half of last year,
assholes.
over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we really look at, is estimated to have been little changed in March.
Got
over
fucked
February,
again.
2.8%, and the 3 and 6 month measures of inflation are
Going
actually above
up.
that. So we've said at the FOMC that we'll need
Fuck.
greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. You know, we took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we
Can't
think
believe
policy
I went
is
and hit my
well-positioned to
stop.
handle the risks that we face.
What a
If higher
fucking
inflation
joke.
does persist, we can maintain the current level of restriction for as long as needed.
Fucking right
At the
there.
same time, we have
What a
significant
fucking
space to ease
scam.
should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you on stage together, I know that often you see each other at G7, at G20 meetings, and I think it would be quite interesting for the audience to understand, how collaboration happens or doesn't happen internationally, how central banks work together or don't work together. So, maybe
Such
I could ask
bullshit,
you
man.
to give a perspective on how that happens from your vantage
I
point.
fucking had him.
So, to give you an idea, we do meet quite regularly. So, Tiff and I attend 2 G7 meetings per year for ministers. That's
It's
finance
going
ministers
up.
And central bank governors.
It's going
We
way
don't
up,
attend
people.
the leaders meeting, but we attend.
Fucking
in the
bullshit.
we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International Settlements in Basel. One of those is now virtual, but we're and that's only central bankers, no finance ministries. So it's all central banking stuff. And, it's economics, it's financial regulation, all those things. We also come here to Washington, or every third year we go someplace else twice a
Fucking
year for the IMF
bullshit.
World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question. Essentially, the central bankers, are having an ongoing conversation about what's going on in their own economies and their own financial markets, their own regulatory world, with each other. And we're also talking about the big global issues of the day, as you would expect. So some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time. They're
Fucking
very
highway
informative
robbery.
discussions, and they really are, for me anyway, part
Can't
of the
believe
way
that went down below
that
5080.
I get to thinking about what the right policy is for the United States. Here, what is going on around the world, what's happening globally, and how are people thinking about that. So it's very, very useful, particularly, though, given our close cultural, financial, and economic ties with Canada. Those discussions are especially fruitful and important, and I have regular conversations with Tiff. By the way, I do keep very close track of the actions of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that. Tiff did mention the similarities and differences. I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and we're there for 4 or 5 nights, and there are usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation who are really good and very funny and a lot of fun together.
Fucking
So
highway
we have a very
robbery.
close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first review of our monetary policy framework really ever. And we looked around. Bank of Canada also does
Highway motherfucking robbery.
In any case, we really looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
Tiff, similar perspective from Canada?
Yes, I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts of this job is we do, the international community, the central banking community, it's not like a commercial bank where you're competing against the other bank. We're all in this together. And if we get it right, we all help each other. So there is a considerable openness. And, as Jay outlined, I think there's a few different functions. Yes, we, obviously, if you're in Canada, we have our own group at the Bank of Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada, but the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting. It's thinking through the scenarios together. What risks are on your mind, Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened? Being able to put your heads together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind-the-scenes very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy and that sort of plumbing working of the financial system. And being able to talk to people who are thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global financial crisis. What happens in other countries affects all of us. And money flows across borders. So, we have to do that together or it's not going to work.
Well, maybe we can drill into that for a minute. Obviously we recognize that most of your work is focused on the domestic market.
Unbelievable.
But in times of crisis, there's real challenges. You mentioned in the COVID period, the global financial crisis, that you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments?
Bullshit, man.
The financial system's resilient. So again, maybe over to you, Jay, to react to that and hear your thoughts.
Sure. So, our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world, and you have to do that very quickly. And we of course can move quickly and effectively on the domestic front. But the thing that you figure out in those times is that all the time you spent at Basel and at the G7 and G20 meetings, your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language, so there's a lot of communication. The level of communication is pretty high anyway, but during crises, it goes very high. I'm constantly talking to other central bankers around the world, and also political leaders in our government, and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at, and you're talking about that. So it's very useful. I'd say one thing to point out is it's less about coordination than it is about talking and understanding. For one reason, or at least it was during the pandemic, and that was because almost every country's interest rates were very close to zero when the pandemic hit, and so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut very quickly to zero, but I think we were higher than almost any other nation in terms of where our policy rate was. But anyway, there's a lot of communication, and those relationships that you built up really do help at that point. In terms of you asked about learning, what have we learned? I think that the pandemic's going to teach a whole lot of lessons over time. I still think it's too early to say what they are with confidence, and I'll point out, look, the pandemic has surprised us over and over again, most recently in the United States, the remarkably strong performance of the economy at a time when virtually all economists were expecting a recession. So I think if you'd asked for the lessons of the pandemic a year and a half ago, you'd get a very different answer. Now, I think in a year or so we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think. But we will try to learn those lessons. Different point I would say about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring, and I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough, and we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples. First though, I will just underline, when a crisis hits, you're faced with a situation. You have to make decisions, and you have very limited information. The other reality is you have a pretty narrow window to act to be really effective. And for both those reasons, being able to speak, directly to Jay, to connect with our other colleagues, finding out what's happening in their jurisdiction, how are they thinking about it, what do they see as the options. It is hugely important in a crisis. And that it's a little more though than just information sharing. I mean, I think it helps us avoid unintended consequences of our actions. Sometimes you do something and it works for most parties, but not one party. And in a crisis, it's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there, but certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It restarted, reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates rapidly, we all helped each other. I mean, it helped reduce global inflation in goods, which was really the first part of the inflation surge, and it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So for example, at the time of the global financial crisis, there was a coordinated G7 interest rate cut. I remember clearly because it happened at 3 o'clock in the morning in Canada, which was a little bit of a technical challenge.
Did you bastard?
But most of the time, it's not explicit coordination, but it is those conversations. It is that shared information. We have similar objectives, similar goals, similar tools, and we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-U.S. perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that the Canadian policy has to take into account U.S. policy. So maybe could you give us a perspective into how important that is for your deliberations and how that factors into decision making, the U.S. approach?
Well, look, I think it's pretty clear that our U.S. economic relationship is by far our most important relationship. Our economy is highly integrated. 35% of our GDP is exports, and 75% of that goes to the United States. So multiply, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have, most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors, but the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing. 40% of our exports, 13% of our GDP, and the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policies do differ. Our cycles are often quite similar, and certainly through COVID we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where, particularly if the commodity cycle is different, you'll see monetary policy diverge somewhat from the United States. There are limits to how far it can diverge, but
This is where it bounces.
We have our own currency. We have a flexible exchange rate.
Bouncing up.
That absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable, given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment here in the United States.
And is that, have there been changes in this current cycle that have driven any differences? You've talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated rechanneled demand from services to goods.
Can have a huge bounce up,
I'm sure there were unexpected widespread shortages in supply
It
chain.
can't go down.
Not seen in recent memory. In the U.S., several million people had left the labor force, creating a severe labor shortage that was more fully felt once the economy reopened, leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So, very unusual situation. Households had elevated levels of savings, and demand was very, very strong as well. So we thought, what's different is, have thought since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of tight monetary policy on demand, which would give the supply side time and space to recover. And we think today that we're seeing those two things working together to bring that end about. And you saw that, I think, in 2023, which was really in a large way, a supply side story. What happened was the supply side really recovered in 2023. We thought that it would recover in 2021, and in 2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people.
Here's the uptrend.
Workforce, but also
all the way up. It won't stop.
That was the year of the supply side recovery, and you saw the core inflation rates drop
what
by
a fucking scam!
In the face of very strong growth. So that can only be explained by the enormous increase in potential output, supply side year. So that's how I would say it's different this time.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we were talking about the similarities and the
dirty fucking
dealing with
Jews.
inflation and the positive results. But we've seen a divergence in Canada with respect to growth. So clearly there's some differences too. Maybe can you reflect for people what those differences look like and what the ramifications are for you?
Yeah, I will focus on the differences, although I will stress I think the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand.
Nowhere to go but up.
In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year.
Dirty dog.
And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, more than caught up with demand. The economy moved into excess supply, and we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have, so you've been able to grow more with less inflation or less inflationary pressure. And then the second thing is I think monetary policy is having more traction in Canada because the structure of our mortgage markets, half of mortgages have renewed in Canada, and even if your mortgage hasn't renewed, renewing in the next couple of years probably.
Dirty
so
Jew
you're
bar.
thinking ahead, thinking
That's what we
when
call
it
that
renews,
right
I
there.
have to be paying a lot more on my mortgage
30
every
points
month,
down
so
in
maybe
3
I should be
minutes.
saving more money now. So we're seeing
Right as Jerome Powell starts talking. And then of course the recovery, and of course I freaking had a stop loss right here. This little gay wig got me.
Per capita basis, you can see household spending per capita per family has actually gone down, even though growth has not been negative overall. I think moving forward, we are actually seeing growth starting to pick up. The first quarter of this year looks pretty strong. Probably see some choppiness quarter to quarter, but overall we think that strength we're seeing in the first quarter will be sustained through the year, where we think on a quarterly basis growth is going to be averaging about 2% per quarter through this year. That's partly where we expect to see, we're starting to see some pickup in consumption. Partly it is the resilience of the U.S. economy that is supporting our exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation is pretty similar, but you are seeing, I think, some of those differences in the dynamics of the real economy in inflation. Our last few inflation readings have been reasonably good, even though totals still close to 3. Core has been, the last few times ticking down, and if you look at the more timely 3-month measures of core inflation, there is some downward momentum in underlying inflation, and I think that reflects the fact the economy is in excess supply, and that is relieving those price pressures. We're certainly looking for evidence that's going to be sustained. That's what we're looking for right now.
Well, I know that both of you realize that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship, and I also really appreciate all of the comments on the importance of trade to both of our economies, trade between our two countries, and foreign direct investment. And so, while you're not trade policy experts, and I get that your organizations, that's not the focus, I really appreciate you giving us a little sense of, how do you think about trade in economic terms and the importance of that, and how that factors into your economic outlook. And specifically, we're thinking about the importance of the agreement between the United States, Canada, and Mexico, and wondering how you think about that in terms of its impacts on trade in general, on labor markets, on supply. So maybe I could ask you, Jay, to give us any reflections that you might have on that and deliberations impacts.
So I guess I need to start by saying we don't do trade policy. We don't really comment on trade policy other than to say that it's clear that we have a mutually beneficial, large, substantial, ongoing, healthy trade relationship with Canada that we very much welcome. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it. And that is Canadian comedians and comic actors. I started to count the number of really great, funny people. I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers, Norm Macdonald, Rick Moranis, Dan Aykroyd, Catherine O'Hara, and Andrea Martin. And I could go on. So something's going on up there. Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess. Tiff, all jokes aside, any comments from your perspective?
Yeah, well, first of all, as Jay underlined, we don't set trade policy, but let me just say, try to give you more of a picture. I mean, first of all, you just look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country. And that's really, it comes down to geography in some sense. That's fundamental to the interties we have.
These days are so fucking easy too.
Many Canadians are closer to fellow Americans than they are to fellow
It's
Canadians.
coming down every time.
Just the nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things in Canada, we buy a lot of your consumer goods in the United States. We have a very two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce. We buy a lot of cars and trucks that you produce. Similarly, energy. We're both energy producers. It often makes more sense to trade the energy north-south than to ship it across the country. So we have a very dynamic two-way energy relationship. And you look forward and you think about how much electricity the world's going to need. I expect that relationship is only going to grow. Another element that is growing quickly, and maybe that's partly comedians, is the fastest growing part of trade is trade and services. Now, if you want a haircut, you still have to do it in your own country, unless you want to go to New York to get a really fancy one. But but increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is on U.S. MCA. Obviously, for both countries, the market access is key. The other thing I would underline, though, it's also the certainty about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That allows businesses to make investments, to deploy their risk capital, to commit to the future. And it's that certainty of access that is really key to building investment. I'll stop there. Thank you.
Well, I'd like to thank both of you for taking some time with all of us. I think if we had looked back a couple of years ago and reflected on what we were thinking back then might be the trajectory of our economies, we probably wouldn't have had an expectation that we would have been where we are today. We would have expected more challenges than we've faced, And I think we need to recognize that the stewardship
That you're a dirty fucking
the
Jew?
Federal Reserve in the United States and the Bank of Canada in Canada have been responsible for has made an enormous difference in citizens' lives. I mean, we're in a situation that is virtually our best case scenario. So it's probably not often enough that on stage you're recognized for that important work, and I want to thank both of you for all that you're doing for all of us in making that the reality. And also I want to thank you for taking some time here. I mean, we are reflecting on the fact that in a couple of years the U.S.-Mexico-Canadian trade agreement will be looked at again, and we want to reinforce the importance of working together, the importance of collaboration and cooperation, and really great trading relationships. So this is an important way for us to start this off, seeing the collegiality between the two of you, knowing how well people work together is really important.
Fucking impossible.
So, thank you very much, and I know it's a busy week for you, so we appreciate also taking the time during this busy week. So, thank you.
Fucking dirty ass fucking Jews robbing everybody.
From the Canada Institute, I'm going to ask Zabi Delgado to close off our session today.
Thank you, Bill. That concludes today's program, everybody. Thank you all, everybody in the room and online for joining us today.
You gay
I also
fucking
want to give a
Jew.
thanks to our very...
Shut the fuck up. Goddamn Jews. Just... Every day. Just... Today. Today. fucking gain and I'm fucking up nothing. What a fucking joke. They fucking robbed me, man. Unbelievable. Fucking real. It's going up from here. Unbelievable. Fucking knew it was happening and I just didn't know it dropped just that much. I underestimated the Jews. Fucking dirty ass motherfuckers. Fucking March, man. Fucking gross. Makes sense. It's going away the fuck up. God damn it, what have I done? Today was the day. So sick of not being able to do an update video at the end of fucking the trading session because there's fucking nothing to talk about. What's wrong with me? I fucking had it today too. Dirty fucking Jew. Damn it. Fucking pussy ass motherfucking Jews.